Morning, my name's Harry Watt and welcome to another Market Matters video update. This morning I'm joined by James Gerrish, our primary contributor. How are you, James?
Yeah, well, Harry, how are you?
Yeah, good. We're going to keep it short and sharp today. Firstly, we've had a couple of weeks into the back end of May, coming off about 2.5% from our mid-May highs. What are your thoughts? Will that continue?
Yeah, typical May weakness, sell in May and go away has held true this May so far. If you think about the ASX 200 now, we're testing that 6,000 level. It's been weakness in the banking space that's obviously been the biggest weight on the market, but we're also starting to see some selling amongst the resource companies. So right now, for this 6,000 level to hold, we need to see the banking space to come out of this post Royal Commission stupor that it's in and find some support. We're seeing tentative signs of that, just as money's starting to come out of resources, and we'll talk about that shortly, no doubt, Harry.
Yeah, of course. You did mention resources. We spoke about 5 resource stocks we've got a close eye on this morning. What are your views there? Can you extrapolate on that report? What are we looking at?
Yeah, so if you think about our resource holdings at the moment, we had BHP, Rio, Oz Minerals in the portfolio. We've taken all of those out of the portfolio in recent times. We're holding Independence Group as a play in the platinum portfolio at the moment. We've got Orocobre in there. Both of those are more stock specific plays. I guess our broader overarching views around the resources is that they ran a little bit too hard too fast. We took BHP out at $34 as the last level. That's back down testing the 32.50 area. We buys again around the 29.50 area of BHP, using that as a proxy for the broader sector. So I think right now it's come back around that 32.50 mark. That could provide support for BHP in the short term. So I wouldn't be surprised if we see some short-term strength in BHP off this critical technical level, but then it rolls over and retests that 29.50 level. I wrote about the correlation between US 10-year bond yields and BHP, using BHP as a proxy. Interest rates going higher are really bullish for resources. So higher interest rates, higher inflation is a bullish backdrop for resources. It's a bullish backdrop for commodity prices. So that theme is well and truly in play. We like resources longer term because of those key themes playing out. In the short term though, we've had US bond yields pull back, so interest rates come back in the short term, and that's putting some pressure on the resource trade. So as I wrote this morning, you've got to fade that. It's not a change of trend, we've just got to fade this short-term movement in US interest rates to then get set back in the resources space, to then sell out of some of those higher yield defensive areas. Property's done well in recent times, so we'll be trimming that, we'll be selling, sell property and buy back in the resources, into relative strength and weakness is how we play, Harry.
So a lot of chat about resources there. Is there anything else we're looking at the end of the financial year into early FY19?
Yeah, I mean, right now I'd be, IGO looks, we hold it, but IGO looks interesting as a buy right now. Some of those, I wrote about stocks that were susceptible to a short squeeze going into the financial year end. Domino's Pizza, we saw that, DMP. We don't like that business longer term, but it has showed some interesting characteristics in the last couple of days. You think about Woolies Wesfarmers. We had a downgrade from Metcash yesterday. That stock got hit pretty hard, down 17% yesterday. It was on the back of the prior week. There was a strong broker upgrade, which 4 days later the company downgrade. So that's why it got hit pretty hard. But you think about Woolies on 22 times, Wesfarmers on 17.5 times. Metcash is cheap, rightly so, it's on about 13 times. But in my mind, I'm sellers of Wesfarmers, I'm sellers of Woolies into the recent strength that's been prevailing in those areas. So you might start to see things that have struggled this year, the Telstra of this world. We own Telstra. It's been, we think it's a buy below 280, but that might suffer some end of, before pre-June tax loss selling. So look, there'll be opportunities going into June. We'll keep our fingers on the pulse. We want to buy resources into weakness. We're pretty comfortable in our banks. We will add to those if they go lower, and then we'll be taking stock-specific opportunities as they rise. So we're pretty comfortable at the moment, Harry.
Good to hear. We'll leave it there for today. Thank you for joining us, James. It's been a pleasure.